Hello, today is Saturday, August 22nd, 2026. Here is your daily signal. According to Fortune, Treasury Secretary Scott Bessent has adopted the most interventionist approach in decades as the U.S. national debt hits a staggering $40 trillion and the Treasury rolls out expanded bond buybacks and even yen purchases. The debt milestone comes as the Treasury increasingly intervenes in bond markets with buyback programs, aiming to stabilize market liquidity, and reflects a pattern of aggressive measures including foreign exchange operations. On August 20th, Bessent asserted, "There's nothing magic about the $40 trillion number," expressing confidence in managing the nation's debt trajectory, while ING critiqued the Treasury's $4 billion bond buyback as merely rearranging deck chairs on the Titanic. These moves have immediate aims: stabilizing bond yields and reducing short-term market volatility, though persistent deficits could eventually erode investor confidence, raise U.S. financing costs, and prompt foreign holders of U.S. debt to reconsider their exposure. Critics, including major institutions like ING, warn that the effectiveness of such activist intervention remains hotly debated as the debt grows. Next, on to Middle America, where consumer sentiment is making retail waves. Fortune reports that Walmart's sales growth has slumped to a 6-year low, a slowdown linked to a growing wave of retail strikes among Middle American shoppers, highlighting shifting spending habits across the country. Historically, Walmart is a bellwether for U.S. consumer confidence, with Middle America forming the retailer's biggest market and continued sales trends often mirroring nationwide economic patterns. This year, despite the retail action, Walmart continues to attract more high-earning customers, those with annual incomes above $100,000, even as lower-income shoppers pull back, causing leadership led by CEO Doug McMillon to refocus strategy. If the strike endures, Walmart could see ongoing sales stagnation, and may tilt its marketing and product range further toward higher-income households. Such upheaval could challenge its traditional pricing power while making consumer demand less predictable for everyone from store managers to suppliers. Now turning to the fast-growing world of artificial intelligence, TechCrunch reports that AI training data startup Micro One has reached a $500 million gross run rate, shining a spotlight on the surging economy for high-quality datasets fueling today's AI boom. AI data companies like Micro One underpin the development of powerful generative models by sourcing, curating, and labeling massive datasets for use by giants such as Google, OpenAI, and Meta. Their revenue streams typically come from subscriptions, per dataset fees, and custom contracts, and strong demand for proprietary data has turned this once niche sector into a major tech battleground. Micro One rise, alongside peers such as Scale AI and Labelbox, is being closely watched by investors like Andreessen Horowitz and Sequoia, given their clients' increasing need for unique, diverse, and ethically sourced data. With capital flowing in, the short-term outlook suggests possible industry consolidation as bigger players absorb smaller rivals, while ever more sophisticated AI models turn on access to differentiated datasets. Longer-term, regulatory pressures over privacy and sourcing are set to grow, and the firms with the best, cleanest data could own the future of AI. Now, onto the markets. International stocks were generally higher, with Germany ETFs showing strong momentum as EWG advanced over 6.9% month-on-month, while Belgium's EWK gained more than 3.6% for the month and outperformed several peers. France's EWQ was up modestly, with the Netherlands also seeing positive moves, and Chile's ECH recorded the largest daily gain in this group at nearly 2%. Among commodities, gold led gains, with GLD rising by over 11% month-on-month and a daily surge of 1.95%, while platinum, represented by PPLT, also jumped over 14% month-on-month. SLV, tracking silver, gained 16% for the month, but agriculture edged slightly lower on the day and posted minimal gains for the month. U.S. oil remained stable, with USO showing modest monthly improvement, while uranium had a standout daily gain of 5%. In sectors, the S&P 500 ETF SPY moved up by 0.4% day-over-day with positive momentum, and healthcare outperformed, with Roman 45 rising nearly 13% on the day. Semiconductors lagged, as stocks dipped by over 6% during the month, where Marvell was among the notable movers. Microsoft continued its positive run with a monthly climb of around 23.8%. Among today's top gainers, RF Acquisition Corp Roman 2 RFI soared over 226%, while stablecoin XUSD rallied 73%. On the losing side, Megan Holdings MGN plunged almost 98% and NFD Limited MI dropped more than 58%. That's it for today. You can find more news and details on our website. Goodbye.